Hello, today is Thursday. It is the 5th of July 2012. Thank you for tuning in. And before we get started, I want to first talk about the video I did yesterday regarding the fruit juices and product inflation through reduction in size, the ratings and comments. So magnificent. And what I was thinking within that video, I kind of made it viewable on small players or video players that were very small because it was a major zoom in within the product. Now, I spent exactly the same amount of time on the planet Venus as I have on a smartphone, but I've seen them both pretty much every single day. I don't know how well these videos would look on that of a smartphone, so I would be interested to know if you're looking at this video on a very small player, is it even possible to even really watch this video? I'm kind of interested, actually. Okay, let's get started. And when I'm looking at this chart, I stated yesterday that it was a full day above this 18 average of highs, but it was July 1st, July 4th, it was United States Independence Day or Dependence Day, however you want to look at it. And I want to see another day for it to at least stay above the 18 average of closes and highs. Well, the highs, and it didn't do that. It's back down to this 27.5 level, currently at 27.67. But back within this band, I think this area is going to be very important, really a whole band in itself. For if it manages to break below this, I'm really not going to be liking the movements lower, or I'm going to be expecting huge fast ones lower. For if we are to not go down to the 22, 21, or whatever those lower areas happen to be, I think that the most likely scenario is that we do find the support here at 27.5 or even around 27, but 27.5 is a significant level, and go up from there. And of course, if it is going back lower, we're in a bear market, we're making all of these lower lows, all of these lower highs. So quite frankly, this would just be the lower high of this, because the last previous lower high before this is 30, almost 30, that is, right in here. Well, now it's made another high. So if this high is going to go lower, then that would be, again, the next pattern of the, the lower high happens to be. Let's shorten this out. Take a look at this on the 5-hour chart. These charts are available in the directory link in the more information box, and the more info box, yeah. Okay, so this 28.41 level, significant resistance. It stabilized, held support for a little while, then came back up to this level, exactly at 28.41, and then it sold off down to this level. So 27.50 was the support level that I was stating yesterday, and basically for this selling to be a failed move, it needs to hold and stay above this level here. So that hasn't happened yet. For the bear market to continue its process, that it needs to hold and stay below this level here. So that's basically why I'm stating if this level does not really hold, other than a quick pierce below it, that it could be dangerous, of course, for the market dynamics. Now, let's just quickly take a look at this on a 2-minute chart. So overall, this is about 3 hours in duration, and this is using Greenwich time as well. Therefore, again, the high is 28.41. And that's today's high of the day, which was set roughly at around lunchtime in Greenwich time. It's not even lunch where I'm doing the video yet, so I guess they're saying this in the future. No, of course not. And then roughly at around 12:35, it went down to 27.54. And I remember saying yesterday that the key levels of 27.50 was just a little bit above that, so I guess it was more of an accurate hit there at the 27.54. Let me see, do I have it on me? Let me just see if I can find what the exact level was, because I'm kind of interested now. The exact level is 27.55. Yeah, so that was pretty much an exact hit down here. Alrighty, so what you see is that you have your bounce at that level, and it has at least went sideways for a little while. Because when I talk about a specific level to be some level of support or to have some sort of bounce from that, this is some sort. Now, ideally, if you have a higher moves up to the low 28s, 28 evens, even anywhere in this area here, and then you come back down to 2750, it's not quite as strong. That doesn't necessarily mean it wouldn't hold. For example, when we go back to the 5-hour time frame, you can come up and say, well, it came back to this level. That means it was going to take it in. No, although I would have liked its chances a lot higher. And when it does do something like this, when you go up, you settle down like this, and you come back, quite frankly, I'm looking for support at a higher low, and, well, that didn't happen. And then when you see instantly that it goes from 41, or excuse, 28.41, and then really breaks below 28, then that's pretty, it's telling you it's not a real move that's going higher, and it's just, it's probably going to go lower. For example, when we take a look at this again, we're looking at 28.41 the top with a little over 28. Wrong chart, by the way. Let's do 2 minute. So, yeah, roughly around here, right here, there's a support level. So, it hits this, fine. Okay, so now it's going to go higher. Nope. And then once it breaks below the support level, it goes down fairly fast, which is quite normal. Okay, so thank you for tuning in to today's video, and have yourself a magnificent day. Bye-bye.